I went from being laid off to actually making 6 figures in 2020, 7 figures being $1 million plus in 2021, and in the past 2 years, making $10 million plus. Now I'm only 30 years old, which you heard me right, it's 30. Semi-retired since money's not an issue anymore, thankfully. Things are paid off, no more credit card debt. Have bought the majority of things I've actually wanted within reason, and now I want to actually help people to actually make their first 6 figures like I did. Now, real quick, by the way, this is not some get rich quick scheme or some ploy to make it so I show you this stuff and I end up saying, by the way, at the end, buy my $50 or $49.99 course so you can actually talk with me in my Discord and I can help you out. It's none of that. I don't need your $50. I don't need your $100. I don't need that realistically. Every single thing you need to make your first 6 figures is inside of this video right here. So I just hope and pray that it actually will realistically help you out. So I can help you. Let's talk about how exactly you can make that $120,000 per year with this specific skill that I'm going to actually teach you in this video. So without further ado, let's just get straight to the point. Mathematically, how exactly do you make $120,000? What exactly does that look like? What skill basically do you need to actually achieve and get? What can I teach you in that, and so on and so forth. So first things first, mathematically, let's see what that exactly looks like. That's basically, to get $120,000 per year, we have to understand the breakdown of this, right? That's $10,000 per single month, right? Because 10,000 times 12 is 120K. Breaking that down as a breakdown 2, that's $2,500 per week because there's 4 weeks inside each month, right? So your goal is not to make $120,000. Your goal is not even to make $10,000 per month. Your goal is not even realistically to make $2,500 per week, but that's the breakdown. Your goal is to make $500 per day since there's 20 business days. So when you think about it, it's a lot simpler of a question of, hey, can you find a skill that teaches you how to make $500 per day? Not, I need a skill that actually shows you how to make $120,000 per year. It's micro goals to help you get your macro goal, right? Final piece, if you can break it down more, which we're not going to hit on too much, but I do want to actually show you this piece because you can continue to break it down, right? But it's $62.50 per business hour, technically. So the real goal, as mentioned, it's not how do you make this crazy $120,000. It's how can you make $500 or the $62.50 per hour. And by the way, as mentioned before, I've made millions of dollars. This is the same math you can technically use for the more money you actually want to make. It's not how do you make $1 million. It's how do you make whatever the amount you need to make per day, per hour. Let's talk about the main 3 ways for you to make your $120,000 and what exact skill you need for that to actually happen with the path of least resistance, realistically, right? So with that being said, this is not going to be like, hey, jump into real estate investing and get into a good amount of debt, because I don't know about you, but especially when you're starting out trying to make your first 120K, usually you don't have a whole bunch of money to get into a whole bunch of debt to make some money with passive real estate investing. This is not some, I'm going to show you how to make passive money. This is, you're going to work to learn this skill, and this skill is going to earn you a bunch of money. Not you're going to get some money, put it into the real estate, and just hope to get a few bucks after profitability starts striking in. None of that. But anyway, let's get started. First things first, talk about the old classic, right? One way, of course, to get $120,000 is working a job. The pros, which is, of course, you get reliable income and comfortable stability. It's kind of a catch-22, I guess, because essentially you have this quote-unquote reliable income, comfortable stability, but it's until it's not comfortable and until it's not stable. Because in my past as an IT director, I got laid off at Christmas time, unfortunately. So it was stable until it wasn't. Realistically, I know some of you all probably have gone through the same things. But besides that piece, which I guess I left out of the cons area, is that you have a capped salary per job, per industry, per company. Plus, as many of you all know, and I remember I hated it so much, is that you work every single week for 40 plus years straight with no break. And you get this full year with, 2 weeks vacation, even though there's 52 weeks in a year. And I could keep going on with that. But leave a comment below if you're tired of your actual day job and working 8-hour days. 10-hour days, because you work 8 hours and you got to drive 2 hours. So leave a comment below saying, I'm tired of my job. If you're actually tired of your job, I'll probably leave the same comment. So I'll join you. at least when I have my job. But this is what I'm here to show you. You don't have to work a job to make 120K. You can work a job to make 120K, but you don't need to. It's not necessary, but it's an option. So maybe some of you all still fall in that category. But that next thing, of course, is starting a business. Pros, uncapped potential to earn unlimited money. Realistically, right? Some of the largest, most wealthiest people in the world have, again, the most uncapped potential to earn so much money. But of course, the cons is that, at least starting it, is that you must wear every single hat in the business. So that means you do marketing, but you also do the sales starting out. But that also means you do HR. But that also means you do fulfillment, doing the actual work to get the pay. You do you do customer service. You do all of it, right? So it's not uncommon to work 2+ years without earning a single $1 US because it's so much to learn. So again, I have a business. I have multiple businesses, but that isn't necessary. I'm not telling you to do that because, again, as mentioned, I'm telling you to do the path of least resistance. This has uncapped potential, but the path is extremely difficult because you have to start out from ground zero, and there's so much to learn depending on the business, the industry, and etc. So third thing, which is the answer of the main way for you to be able to make $120,000 in a very, very simplistic way is the following, which is day trading 1 hour per day. And it's not a typo. I literally mean 1 hour per day. The pros, same thing as above, uncapped potential to earn unlimited money. Because as long as you wake up, you're the one that's able to actually make the trade and make the money. Plus, once you master it, you can work literally 5 hours per week max. And I'll show you actually in this video here how exactly that makes sense, how that's possible, things to look for, the exact trade to look for, because every single day you should be taking the same exact boring trade to make the same exact exciting money. It's not follow all these different things and buy Tesla and buy all these other things. It's much simpler than that. So the cons, realistically, to jump to that, is that it's difficult to find a reliable winning strategy, and trading psychology realistically is hard to manage. But again, I'll talk through both those cons, and I'll turn those cons into pros realistically. Because if you just need to find a strategy that works, then you just find one and prove that it works to yourself or whoever's trading it, and then you have that down packed. And the only last piece is the trader psychology piece, which is for some people we'll talk about it later. Actually, I don't want to get ahead of myself. I'll pause it right there. So first things first, let's jump into this, right? We need the 4-step plan on how exactly to day trade and earn your 120K. This is going to be big picture perspective. So this is your kind of roadmap essentially on what to do, when to do it, and exactly step by step. So first things first, step 1 is understanding the basics, right? It's understanding what exactly is the stock market. And in that stock market, why do things go up and down? Like, what's this chart movement about? And how do you buy stuff when it's down, and how do you sell it when it's up, or vice versa? What exactly am I buying with this whole stocks and options stuff? Like, what is that? Like, what's the definition of these things? And then final thing is generally understanding how to navigate trading software. So to sum this up, it's basically what exactly is the stock market, why do things move, and how to buy stuff inside of a software, and I know what the heck I'm buying. That's basically the gist of it. Or to put it in a different analogy, it's when I walk into a store, what exactly am I buying, and how do I navigate the store, right? And how do I pay for things? It's just a store, but it's just kind of online because you're buying different stocks. But again, I don't want to get ahead of myself, but you need to understand the basics of all that stuff. But again, we'll talk about a lot of that. Next thing, step 2, the strategy. Understanding a trading strategy is extremely important. It needs to have exact proven data to work on 1 to 3 stocks. So whatever strategy you find, you need to, whoever created it, you need to find the person who created it, and 2, actually give them to show you the proof of like, hey, this actually works. Not what everyone else does, which is the reason why 90% of day traders fail. It's crazy as that sounds, because people literally, they grab it. They say, okay, here's a strategy. It says there's a company called Apple. and I should buy it in the morning when the stock market opens and sell it in 5 minutes. Well, question it. Why? Is there some data that basically comes back and says that it typically always works 80% of the time? No. Then why would you put your hard-earned money towards it if you don't have that data? Or did maybe you have someone that has a whole bunch of testimonials to show proof and people you can actually talk to that it actually works? No. Then why would you put your money towards it? That's like going to a dealership. You want to go buy the car, but you've never seen the car on the road, and you don't know anyone that's ever had the car, and you're like, I'll buy it paid in full for, I guess, $45,000. Kind of be cool. You told me, the seller, you told me that it appreciated in value to $96,000 in 2 months. Sounds like a good idea. It makes no sense. First of all, you need data-based proof before you do anything. Because when you think about it, let me go back for a second. To be honest, day trading in a very similar way is like starting a business, because you are still the only person that's clicking the buttons to buy and to sell, because it's your business. It's your baby. It's your responsibility. You have all the ability to do everything. But the good thing with day trading is that there's no HR. You're the only employee. There's no sales. You don't buy and sell anything technically like to another person. You're just buying and selling stocks. There's no marketing. There's none in the market. You're just buying and selling stocks, right? There's no HR. There's none of that, right? So we got to go back here. So this piece is the step 2 for the strategy. You need to understand it. Find a strategy that works. And 2, and by the way, before I go to the piece over here, if you're wondering if you're already day trading, maybe you're watching this video, you're already a day trader or trying to be a day trader, and you're like, I just can't win. It's because before we even get to step 3 and step 4 over here, it's because you don't have a strategy that's proven to work. Of course, you can't make anything work. You understand step 1, but step 2 is flopping, and step 3 is flopping, step 4 is flopping because you don't have anything that works. But next thing is that part of that strategy, it must provide pre-planned entries, exits, so you know what to do and when to do it. So if someone says, hey, buy Apple at 8 a.m., 9 a.m., 10 a.m., CST, whatever, what exact price do you buy it at? What exact price do you sell it at? It needs to be predetermined before you do anything. Again, same with a car analogy. If you're getting into a car and you're going to go drive to the store, what's the navigation to actually get there? Too many people end up trying to buy a stock, trying to buy an option, trying to buy something, and they're like, I don't know where I'm exiting. It's like when it goes up, I'll exit. And then they don't make any money because they're like, well, I didn't know when to exit. I held it for 6 years and now it was up $9,000, and out of nowhere, I just looked out of nowhere, I'm down negative $2,000. It's like, well, why didn't you sell it? You had no plan. Of course, you're gonna fail if you don't have a plan. But anyway, that's step 2. Step 3, it's practice. Right now, you see what this is getting at, right? It's basics first, strategy second, practice third. Too many people go left side only, being step 1 basics. Like, cool, let me start practicing. Or let me just jump ahead real quick. Let's just go step 1 basics to step 4 implementation. That makes absolutely no sense at all. To continue the driving analogy, you're basically saying, I learned about a car and what that thing is, and I just started driving by myself because I wanted to go to the store and buy something. You haven't practiced. You don't have a reliable car. How in the... Let me take a step back. Am I crazy here? Leave a comment below and let me know. Is Maurice, my name's Maurice, by the way, Maurice Kenny. Is Maurice Kenny losing it? Because I feel like this makes the most sense, especially with the little car analogy here. But step 3, practice. For 1 to 3 months, practice the strategy with paper money. It's supposed to be money, excuse me. So you can prove that the data is valid and that it actually works for you, more importantly. Because again, car analogy as well, just because you can drive a car doesn't mean you can drive an 18-wheeler. When you really think about it, right? You have to practice with the 18-wheeler more. So everything's different. So you find a strategy that works, that's proven to work. Then step 3, do the practicing so you can make sure the data that they told you that this is a good strategy, that it's valid, and that you can make the validness of the valid strategy work and be valid. That's step 3. Step 4, do the same 1 trade every single day and earn the $500 per day. So you wrap everything up with a pretty little bow. And that's 100% on the 4-step piece on how exactly to day trade and earn $120,000 per day. Key piece on here is do the same 1 trade every day. That's possible if you have pre-planned entries and pre-planned exits for a win and pre-planned exits for a loss, which again, I'll walk through very soon on charts, on data, on everything, on how that makes sense and how that's possible. So hold up. I know you're asking the question now of, well, what am I supposed to day trade as the step one? Like, can you get the ball rolling on step one? Cool. Let's jump into that then. First things first, when I answer that single question, which is basically, what asset do you actually trade? Because as a FY in the stock market, and quick definition wise, the stock market is basically just all of the companies that are listed that essentially you can buy and you can sell because they're public companies. That's essentially the stock market as a whole. There's way more detailed explanations of it and all this stuff, but realistically, no one cares. Because I'd imagine all you care about and all I care about is that, hey, I can buy something at a certain price and sell it at a higher price and make money. I don't care about the detailed, crazy definitions or whatnot. Keep things as simple as possible. I like simple, hopefully you like simple as well. So FYI, when it comes to that stock market that I just simply defined, there's literally over 2,272 plus stocks that are available in the stock market that you can buy. That's not everything, but I'm just saying there's over that amount. So which one exactly do you trade? And I'm going to narrow it down to one is FYI. Because again, I don't like complicated things. I want you to day trade one single thing to make it as simple as possible. So first, maybe the option potentially could be Tesla, right? Option one. So the question is, should you actually trade a stock that's popular and it may or may not be future proof because it's electric versus oil and gas for the most part? And it's like, hey, so that means it could be here a long time, etc. Or maybe step two, should you trade a stock like Apple because 60% of Americans own just a Mac device, period, which means it's a conglomerate for the most part inside of the United States and further than that. So it's like, do you get a company, something like that? And realistically, even out of the two, I say it's neither, right? Because we're looking for something that's, from a data perspective, has something that's proven to work. And something that's proven to work trading-wise is the following, which is the SPY, which is the S&P 500. The S&P 500 is exactly as this says here. It's the top 500 companies in the United States grouped together. And you may be saying, well, why exactly you pick this thing versus those two, Maurice? Well, these two over here are inside of this, hence why the circle is bigger than these two. So the question is, why trade them individually when you can just trade it all together, for one, right? And two, as FY, as mentioned out here, SPY, so SPY, I'm going to relate it to SPY now. SPY moves in a very predictable way that's fast on the day to day, but slow week to week. So it's very predictable because, again, it's the top 500 companies. So Tesla, as an example, they could get some crazy news and the stock could spike up and it makes no sense. Or it could spike down, meaning you lose money, and it makes no sense. Same with Apple. But if you're trading the SPY and leaving technical stuff out of it, if Apple shoots up, but all the other companies do something else, doesn't matter. SPY is like, oh, I'm taking the average, the weighted average, but the average as a whole and moving the way I'm supposed to move. If you look at the chart for the SPY, the S&P 500, it's just been trending up for the past 40 plus years anyway. It's the most predictable thing ever. A 5-year-old can look at the SPY chart and say, where's the stock market going for the SPY, the S&P 500 as a whole? And they'll say, look, it's going up, because it's not that simple. Like, go to Google right now and type in the S&P 500, SPY chart. It's going to come up just as that. So that's a piece that makes it so much more reliable, so much more simple to understand. And it moves enough for you to make really good money, like that $500 per day, for you to actually trade. So let's jump into the chart. This is the SPY that we talked about, the S&P 500. This is on a platform called TD Ameritrade, Thinkorswim. The company is called TD Ameritrade, and this software that you can download is called Thinkorswim. Short little acronym is called TOS, basically. You can download it, it's all free, and etc. But this is a chart of a random day from last month for the SPY. And I want to kind of walk through some of this stuff here, basically. So what you're looking at is, again, it's a chart of the SPY of one single day. And it's just a whole bunch of green and red things kind of moving up and down, up and down, up and down. So these all are called candles, basically. So this little green guy over here is a candle that represents 5 minutes. of that day. This is another green candle that represents 5 minutes of that day, 5 minutes, 5 minutes, 5 minutes, and so on and so forth, right? All the way from 8:30 a.m. CST to 1500 hours over here CST as well, for you to basically trade. So anytime you're right, so the catch when it comes to trading is that you just have to be right about the direction. If the stock market goes up, then you can make money when the stock market goes up as long as you're right about that direction. And now there's a bunch of trades all over here, the place. But again, we're going to get to that step by step basically as well. All right, so to get started, I'm going to teach you the entire strategy of what you need to do to make that $500 per day, $120,000 per year, and so on. And it's going to be extremely simple. I'm telling you, it's going to be the simplest thing you've probably ever seen. So first things first, answer the question of when exactly to trade this stuff, right? It's going to be the following. So the market opens up at 8:30 a.m. CST. We don't come to potentially try to do this whole trading fiasco thing until 9:30 a.m. CST. So I drew this blue line ahead of time, but this blue line here to basically show you when exactly that time is. The reason why is because we need time for the market to move, to make some moves, to make some setups, for it to actually give us some room so we can draw what we're going to call zones, which I'm talking about very soon and show you detailed on that. But 9:30 a.m. CST is when we're actually be doing some trades. And we're looking, by now, all we'll see at 9:30 is only things on the left-hand side, of this blue line here, basically. So after that, we basically gonna have to essentially come to our computer at 9:30 a.m. CST and start drawing on this chart as a whole. So first things first is we're gonna draw the lowest point of the day, essentially, for this chart here, for the SPY, the S&P 500. So you can see the stock market chart went like this. It started over here at 8:30 a.m. CST. Then 5 minutes later it went up. Next 5 minutes it went up. So green indicates it's going up, and then red indicates it's going down in price, right? So the next minute it went up, next 5 minutes went over here, went downward basically. So you see it went up, down, essentially over here to this piece here. Then went to the side over here for this green candle. Then it started going up, up. Kind of went sideways a little bit over here, went over in that way, and then later on it goes up. So the lowest point of the day, we basically need to draw what's called a support line, which is just it's supporting essentially where exactly it's sitting as low as it can go, basically. So where I draw them specifically is right on the bottom of the candle bodies, which is this is the body of the piece here. So right on the body of this piece. And then it's capturing the lowest piece of the red candle. So at 505.21, we draw a support line from here all the way over, showing it's the lowest part. We don't put it on the bottom of this wick. We only put it on the body of these candles. And then that's the support line. The next piece on the left-hand side of this, you have to actually draw what's the highest point where two candles meet, green and red, on the left-hand side of this blue line. So ask yourself the question, right? If you're trying to do some trading and whatnot, where's the highest point on this chart on the left side of the blue line here? And the answer is right over here, right? The resistance line is what this is called. So you just identified how to draw a resistance line. And that's going to be at 505.74. So you just draw the line over, and then that's your resistance line. It's called resistance line basically because it kind of goes up and it's meeting resistance at a certain topping area, and it kind of starts pulling back basically. But you can see that's on the highest point on the left side of our actual chart. Now, after that, then we draw the demand zone that I basically have here. And this demand zone essentially is always going to be exactly the size of 10 cents, as long as the body of the candle allows it. So if we go back down here, we have our support line as before at 505.21. So we draw a 10 cent green rectangle, basically, above that support line, basically. And so the idea about this is that if you draw this area here, these zones basically act as magnets. So typically they'll come up, they'll do whatever they need to do. And at a certain point, as you can see over here, it came back to actually hit this area, and then it shot straight up. So that's basically a play where we can actually jump in, buy it, and sell it when it goes up higher and make our money. So it's basically we're letting the trade come to us rather than us just jumping in stuff, which, as crazy as it sounds, that's not what a lot of people do. They don't play sniper here. This is letting the trades come to you. A lot of people just jump into things, but this is called having a plan and sticking to it and letting the things actually come to you. And so that's our major demand zone is what we basically call it here. And it's 10 cents of a size. Next, we have a major supply zone, essentially. And this one is not 10 cents. You can see it's a completely different size. But the reason why is because with this one, with the zone, it goes up 10 cents because it covers as much as the candle as possible. But again, the max it can cover is 10 cents for the green rectangle here. The supply zone, it can't cover more than 10 cents because 10 cents would be probably down here. But you see it has to always be two candles next to each other. This green candle here is not large enough per se. So because of that, it can only be the max size of this green candle here. And you draw it over. And you see what's interesting, right? Before I even get crazy into the stuff anyway, the next piece is that, as we already talked about, the zone over here, it did work later down the line. There was a trade. It was a zone here, but you see exactly this is what you need to look for. You draw the zone, price being all these little candles things, they go up, they start doing whatever they need to do, they come around, right? And then boom, it comes back to hit it, and then it goes back up. That's what you're waiting for. You're waiting for yourself to draw a zone at 9:30 a.m. CST, which takes, a minute to draw a line in a rectangle once you really understand it. Then later on, come back once the trade happens. This is at about 1:45 p.m. CST, which you can even do from your phone, by the way. A lot of people do it from their phone to actually enter the trade and jump in, and it works. Now, you may be looking at this. You're like, well, Maurice, this didn't come over and bounce and go down. This just broke straight through it right here. So it didn't work. The strategy's false. It's fake. That's not the case. Because again, it didn't do what this did. This had a zone, went over and did all this and then came back. This showed that it wasn't valid. It had the zone created right here, went down and immediately broke through, right? It needs to kind of go down, go around a little bit, and then come back. Because there's so as a result, there's not a trade here. It did not go sideways. And there's a little more clarity, by the way, if you're taking notes, hopefully you are. When it comes to trades, you can make money betting and saying the market's going to go up, right? But you can also make money if you know for sure that the market's going to go down, because we actually buy stock options, which we'll cover later on. But when it comes to trading, you can make money on both ways. So as long as, again, you're just right about the direction, then you can make the money. Doesn't matter. So this is that. Next piece is that after a little while, right, zones change. So we had our major supply zone, which again, definition wise, it's the highest point of the day. So after a little while of it going up, it kind of came back down and started going back up again. So clearly this is our new high of the day because we finally got a green candle next to a red candle. So we drew our line, our new resistance line at the top, followed by our major support zone, the red rectangle basically, which is exactly 10 cents now, matching the same size as this guy down here. And you can see it went over, kind of tapped it in this area, went down, but we don't like that one. It kind of happened a little too quickly. You can be a trade, but again, I don't like it. It's risky. I'd rather it go around a little bit, come back to hit it, and then boom, it shoots right down, right? This thing went from 506.65 all the way down to 505.5. Are we going to capture all that? No, definitely not. But I'll show you the easier way to actually do it. But again, this is one trade here. Came around, came to tap it again, boom, came down, trade 2, boom, came down, trade 3. That's 3 trades off of the single major supply zone at the top. And the one trade down here off the major demand already. And they happened later in the day. So we had 1 trade, 2, 3, 4. 4 trades in a single day. And I'm telling you, all you need is 1. So if you came here, maybe you were busy, whatever, you just couldn't make this trade. Dang, I missed the trade. Well, it's okay. Got another one. Dang, I missed a trade. This one over here. Dang, I missed a trade. That's fine. Well, again, go back. There's a trade over here. Like, no matter what, you had time to make it. So you just have to be right about the direction. Next, let's keep going. When it comes to the pre-planned entries, we need to talk about that. So there's a couple things in here. On the 5-minute chart is where we draw the zones, which is that line for like the major support zones, the support line here, or the resistance line up here. And we'll draw the major demand zone and the major supply zone, right? But when it comes to the entries and exits, where exactly you click the button to enter on the 1 minute chart is where that's going to happen. And so that's going to look like this. We're going to specifically look down here, basically. Because all these up here work the same exact way, but we're going to look over here. So when it comes to the major demand zone at the bottom, it comes down and it has to hit the zone and has to go upward. So when it hits the zone, I went ahead and made these candle names up. Been using it for years at this point. But again, I like simplistic stuff. So this candle that hits the zone is called the zone candle because it's a red candle going in, hitting the zone. The next following candle for the confirmation pieces is the reversal candle because what's it doing? It's reversing. So it went in green. So excuse me, it went in red. And the way I like to look at it is that the zone being green turned it green and it made this candle green, quote unquote, right? That's kind of the analogy to look for. And it's reversing and visually because it's going back up now, right? Because again, remember, this is directional type behavior. It's going down and it's starting going back up. So if this is the zone candle and this is the reversal candle, then that means the following candle has to go up as well to show the confirmation that it's continued to go up. And so being as boring as I am, I was like, I don't know what to call it. Let's go ahead and call it a confirmation candle because I couldn't think of a better name, but it made sense, right? It's confirming that the other candle was true and it's the same color as the following previous candle, excuse me. And so after that, this is the entry candle over here. So you enter right in this exact spot right here on the 1 minute chart, specifically for this single one trade. So after that, where are we? Exit for a win. We have to then we can set our pre-planned exits of where exactly we would actually sell for a win. So over here, this is a zoomed out version on the 5 minute chart of where we did our entry. A little circle over here. What we need to do is then go to the left and basically draw another zone, but on the closest price point, and that'll be take profit 1. So we go ahead and draw a zone, draw it over, and we wait for it to get to that price because that's telling us that this is when a price point was recently hit to. From a zone perspective, a minor zone, stuff that's in the middle of the chart, and we let it run to that. And so you see as a whole, we entered here and we exit here for a loss, which is much larger of a win in the first place that a lot of people get. And you see it kept going anyway, but that's pre-planned exit for a win. Then there's also a take profit 2. You can go ahead and draw that as well. There's another little small guy. So you see this is where we entered over here. The next area is this right here. That's following take profit 2 is all the way up here. You can see it's smaller than that because this little red candle here is so tiny, but 505.95, you draw it all the way over. It got to here. It still went further on, but take profit 2, 1 and 2, really all you need. You don't need too many take profits. Otherwise, sometimes you can get greedy and that's a whole nother story. But on the 1 minute chart to show you where the entry and exit, what it looks like this. Entry candle, right? We had our zone, reversal, confirmation, entry, which we sometimes call ZRCE, zone, reversal, confirmation, entry candle. You enter here, boom, it goes up, pre-planned exit number 1. Boom, it goes up, pre-planned exit number 2. And yeah, it continued to go up. That's fine. I'm okay to leave some meat on the bone for me to be comfortable, be able to actually exit for the trade for a win. But those are the pieces there where you exit. And now you may be asking, well, I'll show you anyway. You may be asking, well, where the heck do you exit if it was a loss? It's optional, but you have 2 spots. Stop loss 1 is at the bottom of the zone, the top of the zone for your major demand zone and the bottom of your major demand zone as well. You have an option of whichever one you can choose. It depends on how much money you're willing to lose, essentially, which again, we'll talk about it later as well. So it's essentially you're entering here and you exit here or you exit here for the loss. And there's a logic behind it, right? It's like saying, let me go all the way back for you. If this is the lowest part of the day, then we're essentially saying once it goes over and comes back, we're saying because of the data that's here, that realistically this is not going to get lower than the lowest point of the day currently. As a result, it should bounce upward. And you may be saying, Maurice, you're saying should a whole bunch. How do I know the strategy works? You told me about that. 2 things. 1, we do have a one-on-one coaching program. Not saying to buy it, doesn't matter. I'm just literally showing you the full strategy. We have, if you go to mkuniversity.com, 1,003 video testimonials of people that have made this successful and win 70% plus of all of their day trades because of this strategy. If that's not proof, I don't know what is. And more proof is that I'm literally giving you the strategy. I'm willing to bet if you go learn this strategy, everything's free. This video is free. My book is free on Amazon. And, well, not free on Amazon, but it's free on the website as well. You can literally just download it. We have a webinar that's free. We have 300 plus videos, if I remember correctly, on this YouTube channel that's free. The whole strategy is there. Prove that it doesn't work. Right? To your own self for 2. Part 3, for me to actually create this strategy. I'm the creator of this specific strategy. I specifically did a huge data analysis on this to come up with which actual support and resistance lines do I draw. What's the size of the zone, basically, of what I need to draw? Because it seemed like, from a data perspective, that things always came down relatively close to this area or exactly hit this line. So I ended up drawing, from a data perspective, how far away typically are these candles coming back to the zone for it to actually do this quote-unquote weird bounce that it looks like it's doing. Or the question of how often does that exactly happen? The answer, based off of 2 years of data analysis that I did, was that about 80% of the time, this trade happens, and when it happens, it's successful, which is crazy. And another follow-up question is, well, if that's really the case, Maurice, why are you not a billionaire? Well, first of all, you have to do the trades, right? If I'm being really honest, I've made $10 million plus. For me to do this stuff, here's the con. Here's another con of the strategy. For this to happen, you have to wake up at 9:30 a.m. CST. Now, you may be saying, Maurice, I'll go ahead and make me a couple billions. If I wake up 9:30, I'm all good. Well, let me give you my frame here. I have millions of dollars. Everything's paid off. I have no worries in the world. I can do basically almost anything I kind of want to within reason, right? I don't need any more money. So I don't wake up at 9:30 a.m. CST. I don't wake up at 10. Hell, I wake up at 12. So realistically, I've been missed most of my trades. So you have to ask yourself the question, what's your goal with money? Your first goal right now, it's doing this so you can make your $120,000. Understand it. I get it. But at a certain point, your goal, I bet, is actually you want it to make the money so you can spend your time with your family and your friends doing the things you want to do. So it's not that you want to be a billionaire. It's that you want your time back. I have my time back. I don't care. So, hence why I'm giving the strategy away. You have everything here. It's on you now. You need to make your however much millions or however much hundreds of thousands or your first $120,000 or your $500 so you do not have to do any more work. But for that to happen, you got to do the first piece, waking up at 9:30 a.m. CST. For me, so difficult now. But for you, you need to do it regardless so you can make the first cash flow. So, with that being said, going back to this, right? Stop loss 1, stop loss 2. That's the piece there. So your risk to reward ratio, to jump back into it, right? It's like if you're entering here, and let's say your stop loss 1 was the piece where you're exiting. You're risking 1 piece here to make boom, 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 4. There's 4 rectangles. So it's a 4-to-1 risk to reward ratio. So it's like, well, I don't want to give an analogy per se, but it's essentially you're betting $1 that you'll make 4. So realistically, you have a 75% chance of winning in a way. I guess you can kind of frame it that way. So it's a great actual risk to reward. Now, a bad risk to reward, or kind of bad, I guess, is 1-to-1, right? A 50-50 chance, basically. So it's like if you were entering in this spot here, and you're like, okay, I'll stop loss here all the way down here at the bottom, and I'll take profit up here. That's okay, but it's not that great, right? Or if you were, let's say, entering up here, right? You have way more to lose than you do to win. So people have that misconception sometimes, like just because even with this, if the entry candle's up here, then you should enter. If the entry candle's right here and your exit's up here for a win and your stop loss is here for a loss, that's horrible. Do not enter the trade unless you're just so sure. But realistically, you want the path with least resistance. But that's pre-planned exit 1. Pre-planned exit 2 is all the way up there. That's freaking 8-to-1. So it's even better realistically, right? So you're up in positive no matter what it is. So looking deeper, I want to just kind of walk through this question is over here on the left. With the U.S. stock market, on average, misspelling over there, excuse me, with the U.S. stock market, not marketing, Jesus, we're not doing marketing as I mentioned, but market on average providing you with a 7% return annually, what percent increase is the move from this entry candle, go over here, this entry candle over here, to your pre-planned exit one? I want you to answer that question in the comment section below. Is it A, less than 1%, B, about 2%, C, about 5%, or D, 7% plus? Keep in mind, again, people usually, they'll buy the stock market as a whole, the SPY, and sell it at the end of the year for about a 7% gain. So when it comes to day trading, what percent gain do you think this is, at least on this piece here, from here to there? Leave a comment below. Is it A, B, C, or D? Now, the answer is shocking as hell, because we're trading what's called options, which I'm not going to go into here, but we're trading options on the SPY. As a result, the return is crazy, because from here to there is a 13.7% increase. You go back to this piece. From here, the entry candle, to about here is 13.7% of an increase. So you just beat everybody in the entire market for the entire year already. I'm not kidding you. So you may be asking, well, hold on. Wait, bro, if this is that 13, what is here to exit to? Right? That's a 24% increase from the bottom to the top. And if you may be wondering why this chart looks weird, again, this is because we do options. I'm not going to go into it in this video, but it's same day expiration contracts specifically for the SPY. And as a result, the prices are cheaper. And I'll leave it at that. But it's basically, you're buying at this piece, selling at this piece. And it's complete insanity. Again, I'll have a video specifically kind of walking through what exactly this realistically means when it comes to this answer, what stock options are, what more detailed of what the stock market is, why it's more valuable to actually trade stock options as a whole, and so on in another video. But just to let you know, regardless with this strategy, that's a huge increase. So let's walk through some math. If take profit one, where are we? Profit one, price point. If you buy one stock option of the SPY options, it's $88. If you buy 20, it's $1,760. If you buy 40, it's $3,520 for 40. FYI, I buy 100, which I'll talk about later. But when you sell it, when it goes up in value, you'll sell it at $100 for one. $2,000, and the numbers just came out evenly for that reason, by the way, but $2,000 for 20, $4,000 for 40, right? Same over here, right? 109 for one, so on and so forth. You can read it there. So with 40 contracts, the $3,500, excuse me, 4,000 being over here minus 3,520 from down here is $480. So going back from this trade to this trade up here is basically your $500 profit of what we've been talking about for you to do. And let me go all the way back to the craziness. Remember this? There's one trade, 2, 3, and 4. And you only need one. Hell, if you did all 4, that's 500. Excuse me, 500, 1,000, 1,500, 2,000. That's $2K in a day from just that alone. You don't need all these trades, but you just need one. But I'm just saying the potential is realistically unlimited, which is crazy. And so you got to keep in mind, it's like for me, it's like, well, why do you trade 100 contracts? Because rather than $500, it'll be $1,300, right? Essentially, which is, again, insanity. 1,250, excuse me, for the one trade. And that's, if I took the one, if I took the 4, that's about almost $5,000 in a single day. But again, take profit 2. We didn't even talk about take profit 2 because, again, remember, we were saying to exit here for take profit 1, but let's just say it kept going up, which it did on this guy. Take profit 2, you earned $840 off of 40 contracts. So for me, that would have been $816, nearing $2,000 for the single trade, $1,800 give or take for the single trade. You don't need a lot to make $500 per trade. But the catch, I understand, yes, you do need money to make money, but that's still with anything. You need less money than doing some real estate investing stuff, that's for dang sure. You need less money than starting your own business because you might need to pay for ads for thousands of dollars on a regular basis and hope for a return, right? This is different. This is buying and selling things that are predictable and showed proof that it actually works. But yeah, $120,000 per year is one of these trades every single day, and it'll get you your goal of $500 per day, which is $120,000 per year. Now, looking deeper, I want to show you the time piece to this because this is where things get literally insane. The times in the trade. If you do these trades daily, then the zones you draw in the morning, you know, those rectangles and the little lines and whatnot, if it's just showing the low of the day, the high of the day, once you understand that, it only takes 1 minute. The ZRCE candles, the zone reversal confirmation candles, right on that little thing when it starts bouncing off the zone, that's zone, 1 minute candle, reversal, 1 minute candle, confirmation, 1 minute candle, and then you have to wait while this entry candle is forming. As long as it continues the direction, that's the 0.1, and then you jump in on the candle. So 3.1 minutes. And then in the trade, right, this is a close-up on the option, but if you entered here, this is 1 minute, 2 minute, 3 minutes to the middle piece, or if you keep going, right, then it gets over here, then it's a total of what? 3 plus 3 plus 1, 3, 6, 7. 7 minutes in a trade to earn $480, but $500. So two-part question. One, do you have 7 minutes to be able to just do a trade? If you do, you can earn $500 a day. As crazy as that sounds. Part two of the question, do you have maybe 12 minutes? You can basically double your whole return if you can find 12 minutes, you know? But the real question for part three is, do you see that it's literally draw a line, a rectangle, and wait for it to come back over and hit your zone and bounce up? If you can see that, and you can see that, hey, there's a high of the day, and you just wait for it to come hit it and go down, and wait for it to hit it and go down, then you can make $500 a day. You can make $120,000 per year. I'm telling you, it's not. It looks crazy, but this happens all the time. Weekly, if it's 7 minutes, we'll do the 12 actually. But if it's weekly, 12 minutes per day, 5 days a week, is literally only an hour a week you're working to make your $500 per day, which is $2,500 per week. So do you have an hour a day? An hour a week, part-time. I don't even know what that can to be able to make $2,500, which monthly it's 4 hours per month, which annually is 48 hours to make $120,000 per year, which is probably less time. Yeah, probably less time that you spend in traffic going to work to earn less than $120,000. You'll spend less time driving to work. You'll spend more time driving to work than it would take to actually make this $120,000 per year doing these types of trades. It's just crazy. So the catch that I left out is, realistically, depending on where you are, in order for you to actually find these trades every day, you do need to practice at least an hour a day. That's the catch. And of everything I've talked about here, that's the single catch that I left out. I'm sorry, but it's the truth. If you don't practice, you won't get any better. It's not gonna, it may be visually simple to see, but you still need to know when you're in the moment, can you click the buy button, or are you going to be terrified? Because we didn't even hit on trader psychology. But again, that's going to be in other videos later on. But that's the one catch. You need to practice daily, even when you are making money. So you need to do the following. Go sign up for Thinkorswim. That's not an affiliate. I don't care. Sign up for whatever you want. But I'm just telling you, Thinkorswim, the platform I showed you, is the simplest thing. Use paper money to practice daily. Paper money is basically, they give you digits, I guess. They give you fake money so you can actually buy and sell things without your actual money. And start with the one contract. The one contract would be the cost of like that $88 basically, right? And then after that, prove to yourself that you deserve to scale up and actually move to real money. Don't start with 40 contracts because you're like, I'm gonna kill it and make all this money and I'll be rich and da-da-da-da. Otherwise, I guarantee you will 100% fail. realistically. So you need to take things step by step. FYI, final note. If you hate that I'm saying that it takes $3,000 to make real money, then that just means you're not financially ready to trade yet. And that's okay. Start with the one contract for about $100, which I think was $88 when we looked at it, because just because you can does not mean you realistically should. So as a whole, that's the kind of tutorial that I wanted to kind of walk through you all and how exactly to realistically hands-on make $120,000 per year when it comes to the skill of day trading.